Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome to episode 11 of the Fiscal Physical Podcast. My name is Aaron, and I am joined as always by the founder of Alchemy Wealth Management, Ryan Nelson. How are you doing today, Ryan?
I'm doing well. How are you doing?
I am doing just fine. You know, it is a beautiful day here, and I'm excited because we have some, a listener question.
Oh, those are my favorite.
Those are as well. I feel like it's great. You know, we can sit here and talk about these different topics, and that. A lot of people can research and Google on their own, but actually get a personal question like this is sometimes I feel like much easier for people to connect to because it's like, oh, that's a question I might also have that applies to my situation.
100%.
So we'll go ahead and let you guys listen to this question here that was sent in by one of our listeners, and then we'll have Ryan on the other side of this to kind of break it down, digest it, and see if we can get some answers for you. So here you go.
Hey, Ryan. My name's Adam. I recently received a raise at work, and I think it puts me over the threshold of contributing to my Roth IRA. I haven't really gotten clear information on that, so I was wondering if that is the case and, what that threshold is and how you go about still contributing to a Roth IRA if possible. And I also have some funds sitting in a traditional IRA that I still have yet to convert. So I'm wondering if that creates a problem, what the process would be for converting those funds, and, what I do in the situation where I am potentially making too much money to contribute to my Roth IRA. So I would appreciate if you had any insight into that so I could, figure out how to move forward with, still investing in my future. Thanks.
Thank you for that, Adam. Ryan and I have both listened to this question here, and we really want to, thank the listener for sending this in. This is a great one because it really ties in with our previous episodes here. A lot to unpack as well here, so I'm going to go ahead and turn this over to Ryan to kind of break this down for us here.
Yeah, that is a lot to unpack, and it's a phenomenal question, so thanks, Adam, for sending it in. Before I dive into any of the logistics, I think it's always important to remember, what we're not doing here is giving personalized financial advice. We're doing, we're providing some education, hopefully some entertainment. So that said, again, hopefully we can do some education, but don't take this as personalized financial advice. So Adam had some pretty astute comments there. So, I just want to kind of take note of a few things he said. So he got a raise at work, it sounded like.
Congrats.
Yeah, congratulations. That's awesome. And if he's getting bumped above the Roth IRA phase-out limit, double congrats. That's awesome. It means you're getting a nice little salary there. And so one of his questions was, first, what is that Roth IRA phase-out limit? So it changes every single year, but in this year, 2024, the Roth IRA phase-out limit for somebody that's filing their taxes as single, the limit is $146,000 to $161,000. Again, we touched a little bit on this in a previous episode, but let's dive a little deeper into this again. So if you earn, less than $146,000, you can contribute the max amount to your IRA. If you contribute more than $146,000, it depends how much you can contribute. It's kind of a scale, and you can start contributing a little bit less than your max amount. And once you reach $161,000 of income, the amount you can contribute is $0. So typically we'll look at that front number, $146,000. So we'd be trying to evaluate if we think we're going to earn more than $146,000, then we won't be able to contribute the full amount to our Roth IRA. So that'd be the first, I think, kind of barrier we would want to look at. If Adam happens to be married filing jointly, those numbers would be different. The range would be $230,000 a year to $240,000 a year. So that'd be the first consideration we'd want to look at is just the current income level, and indeed, are we earning too much to contribute to our Roth? And then Adam made a couple other astute comments there. So he mentioned he had a traditional IRA, and he mentioned that he hadn't converted it yet. So it sounds like he's aware of what a Roth conversion is, which is awesome. So not sure if he learned that from the podcast or was already aware. I think we talked about that a little bit in episode 8. What is a Roth conversion?
I'm going to assume that he learned it from the podcast.
I like to assume.
That makes me feel good better.
So he has some dollar amount sitting in traditional IRA as well, it sounds like. So it sounds like he's been earning, he's been contributing to his Roth IRA. He's now earning some amount that may disqualify him from continuing to contribute to his Roth IRA. And it sounds like he wants to continue to contribute to his Roth IRA, but has this this traditional IRA that's sitting out there and trying to figure out what to do with that as well. So I think he has a couple options. Again, this isn't personalized financial advice. We're just using this as an example to chat through some different opportunities here. But so in one of these episodes, we talked, it was episode 9, the Backdoor Roth IRA. We talked about something called the Pro-Rata rule. So if we think about Adam, and I'm going to just kind of put a pin in the Pro-Rata rule, and we're going to come back to this in a second. But if we're thinking about Adam and he wants to make these Roth IRA contributions, well, we're going to assume, based on his question, that he probably is earning too much to continue to contribute to his Roth. So first of all, good job, Adam, catching that. Most people never even catch that. They start earning a little bit more, don't realize they've surpassed the threshold, and keep contributing to their Roth IRA. So first of all, good job catching that you've passed that threshold and being aware of it. Second is, if you want to continue to contribute to your Roth IRA while you're above that threshold, we talk about a strategy to do so again in episode 9, Backdoor Roth. So he could make backdoor Roth contributions where he takes the money instead, contributes it to his traditional IRA, and then converts it to Roth. Now I'm going to unpin that pro-rata rule we talked about. So he mentioned he has funds in his traditional IRA right now. Those are all tax-deferred funds, I'm going to assume. So he had contributed them at some point in the past. He had got them tax-deferred. So again, he's not paid taxes on any of the money in his traditional IRA. If he is above the Roth IRA threshold, so he's earning too much to contribute his Roth, he's probably also above the threshold to contribute to his traditional IRA and get a tax deduction. So whatever that bucket of funds is that's in his traditional IRA, he has not paid taxes on. If he tries to do a backdoor Roth IRA and he converts more funds to his IRA, those funds he adds to his IRA are going to be taxed.
Taxed, sure.
So he has this bucket of money that has not been taxed. He's talking about adding some more dollars to that would be taxed. We would call that commingling funds, and this is where the pro-rata rule is going to come into effect. The best example I like to so what sometimes people will say is, well, okay, that's fine. You know, maybe I have $50,000 in my traditional IRA that I have not paid taxes on. That's fine. Let's just add $7,000 to my traditional IRA, and then I'll just take that $7,000 and convert it to Roth. That's a reasonable thought.
Makes sense.
Right? Where this gets tricky, the analogy I like to give is, think of a glass of water. So if you had a glass of water, right? Now let's think about adding more contributions to this glass of water. So let's take some blue food coloring. So we have a glass of water. We take blue food coloring. We put 7 drops of blue food coloring in that represents our $7,000 of contributions we just made. And then you want to go do a Roth conversion. You're not going to be able to scoop back out those 7 drops of blue food coloring.
Right. Yeah.
Right? They're just mixed into this cup of water. There's no way for you to just hand pick out only the food coloring. And so once you put these once you commingle those funds, so once you put these effectively taxed dollars into your traditional IRA that otherwise is full of untaxed dollars, you effectively can never undo that. Right. So these funds are just commingled, and think of that glass of water having these drops of food coloring mixed into it. And so while this is nothing about what I'm saying is like illegal or, violating any IRS regulations, like this is all completely above board, but it creates an accounting nightmare.
Right.
And you'll have to file some different tax forms, and likely your CPA will probably hate you if you do this, right? And they're probably this is going to be a lot more work for either you or for them. And so if you go do this, I would hope that CPA is going to be a lot more work for them. they are probably going to charge you more to file your taxes, right? And so this can run into a mess. And, if you're, a younger person thinking about doing this, like, gosh, do you want to create this mess for the rest of your life? Like, that sounds like an accounting nightmare that you're going to have to deal with. And what if regulations, like legislation changes in the future? Like, how is that going to affect this? We have no idea, right?
Right.
So I think a general best practice, is what I see is most people try to avoid getting into this pro-rata rule to begin with.
Sure.
Right? And so, again, Adam had alluded to something earlier about, I have this traditional IRA that I haven't converted yet. So it sounds like he has plans to maybe convert that traditional IRA. So, what Adam could potentially do is meet with a financial professional, a tax professional, figure out what the tax implications would be to convert that traditional IRA over to his Roth. And if it makes sense for him, sounds like he likes Roth contributions. So it sounds like he thinks his tax rate in the future will be higher. So he's trying to pay his taxes now. It may make sense for him to do a Roth conversion, convert that traditional IRA to Roth. And so if that, after he talks with his professionals, if that it does make sense, he could convert that traditional IRA, every penny of it, over to Roth. Now his account balance is zero. So now
no food coloring in there right now.
Well, now it's just an empty glass.
Right. Yeah.
Now there's no water
nothing
in this glass.
it. Yeah.
So he just took all the water, converted it from traditional IRA over to Roth. Now he's got an empty glass. His traditional IRA is just empty. There's nothing in it. Now if he goes and puts 7 drops of food coloring in there, no harm, no foul. It's not mixed with any water.
Right.
It's just an empty glass. Now it just has food coloring. Now he could convert those 7 drops of food coloring, the $7,000 he put into his traditional IRA. Now he could convert those to his Roth IRA, right?
Cool.
And then he could effectively do that year after year. So by doing that that Roth IRA conversion, so what we talked about in episode 8, the Roth IRA conversion sort of allowed him to be able to do backdoor Roth IRAs, what we talked about in episode 9. So he did one strategy that could parlay into a second strategy for him. So hopefully this helps demonstrate some of the complexity around these things and why it really is, what most people would consider a more advanced strategy and why you might want to consult some professionals. But so again, I think, congratulate Adam, A, on the pay increase, B, for catching that it may put him over a threshold.
Yeah, definitely.
And having the awareness to stop making his Roth contributions, it sounds like, but trying to figure out how could he still do this. So good on Adam for doing all that. And again, in this situation, he could do backdoor Roths immediately. It would probably be a headache that he doesn't want to deal with. So one strategy he might want to explore would be doing a Roth conversion, converting that entire traditional IRA balance to Roth, and then that would allow him to do kind of a cleaner backdoor Roth IRA contributions in the future. With that said, his traditional IRA might be $1 million balance.
Sure.
We don't know.
Yeah,
he didn't mention.
Yeah, we didn't mention.
In which case, he may be listening to this and saying, like, "There's no way I can.
I don't want to pay that taxes right now. You kidding me?
There's no way I can convert that entire balance to traditional. That'd be a huge tax burden that I can't afford, right? And so, in which case, that we kind of talking through some maybe ideal scenarios, but like, he's evaluating this situation for himself. He might not want to do a Roth conversion and convert that traditional IRA to Roth IRA. And in which case he may make the decision not to do backdoor Roth contributions in the future, right? So he definitely has options, and probably more options than he originally thought. So definitely, the deeper you dive into this stuff, you can find more nuance and more exceptions and more everything. So I know this is a more advanced strategy. I hope each of these episodes can stand alone, but again, if this is this conversation is a little bit confusing, I think maybe going back, listening to episode 7, the difference between traditional IRAs and Roth IRAs might give you a foundation. And then episode 8, talking about the details of a Roth conversion specifically. And then episode 9, talking about a backdoor Roth IRA, conversion itself. That might give you some more context, about this conversation as well.
Definitely. No, and I think that the way that you just broke that down too, as far as the analogies and stuff, which I really enjoy. Like, I feel like, the analogies really make it simple for people to be like, hey, not everybody's had a traditional IRA that they might want to convert over to Roth, but everybody's had a glass of water with food coloring.
Right.
Everybody's been able to see that. So I really appreciate how you're able to break that down, because that, sometimes I'm like sitting here and I'm like, oh, wow, my brain's kind of spinning. Then you're like, well, let's break it down in a simpler fashion that everybody knows. And I think that that's a huge piece of, why we're doing this podcast, to break it down to where it's not so daunting and, confusing for
Right.
individuals to be like, oh, I don't know anything about this. I don't want to learn about this.
Right.
But if you take it in small chunks, listen to each episode, and then hopefully learn something. And I think that's a great way to gain that knowledge overall.
Yeah. Well, good. I'm glad to hear that. Thank you, and I'm glad that does make it more digestible. And this is about as technical as probably we will ever be getting.
Sure.
Really. So yeah, you may be swimming a little bit here. This is definitely an advanced topic. But it did, as you could see, kind of compounded off of a few episodes in the past. But yeah, this is the nitty gritty of it, and about as complicated as it can get. And there's going to be a lot more episodes that are a lot simpler than this.
Yeah. Oh, definitely, without a doubt. But we really want to thank all the listeners for tuning in here, and we'll go ahead and actually we'll just go ahead and end this episode. I think this is a good place to kind of end this one here.
Absolutely.
And once again we want to plug if anybody else has any questions like Adam does, email them to podcast@alchemywealth.com. Whatever your situation might be, it doesn't have to be specifically that one, but if you just have a burning question, you're like, hey, what do I do here? Or, this is a situation, like, can you discuss this? And most likely you're not the only person who's in that situation. And once again, we can't give specific financial advice, but we can kind of break it down and kind of go over the different big picture options that are available.
Educate on considerations. And yeah, like you said, I mean, if one person's thinking it, there's probably dozens and dozens of people thinking it. So absolutely, we'd love to hear from everybody.
Awesome. And we'll go ahead and polish this one off here. But it's always a pleasure, Ryan, and hope you have a good rest of the day, man.
Thanks, you as well, and let's stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.